Hey traders, Raghee here. Welcome to another episode of Charts and Coffee. Man, I've got the mad scientist hair going on today. All right, probably because I've been up since 4 doing my chart book, and I am excited to go over some charts with you all. So as always, keep the questions coming. If this is your first episode of Charts and Coffee, we are here every Monday through Friday, 9 to 9:20. And this is your pregame show before you head off into your respective simpler room. I'll look forward to seeing you all in one of the rooms later on today. So just a little bit of housekeeping here. One of the things that I've been doing for members, simpler members, is I've been giving you guys my show notes. So check out the show notes. It's got helpful links. It's got charts, a couple breakdowns. One of the things that we're doing today, we'll be doing this as we do every Wednesday, is we set up the crude oil inventories. And let me show you here on the screen. Where's my handy dandy drawing tool? There it is. All right. So I've got a recording in the show notes that should be really helpful for those of you that are brand new to using volatility and volume events to set up trades. So you'll see right here at 10:30, we've got the crude oil inventories number. And this crude oil inventories number is going to affect, of course, crude oil, RBOB gas, USO. It could affect oil stocks. But what this is, again, being a volume and volatility event, this is a hot zone. It's a high, well, it's a medium impact hot zone, but I would consider it usually high in terms of impact on crude. Why am I focused on crude? Well, if you've been following the free videos at the Simpler Trading YouTube channel, you know that we've been long and bullish, not just energies, but also crude oil and gasoline. We have, it's really a twofer, crude oil, if you think about it. It's a reflation and it's a reopening trade. Now, that is not all for this week or for today's session. We have a second hot zone in terms of the FOMC minutes. So if you want to check these out, I've got a video that walks you through this particular setup, the crude oil inventories first come, first served setup, where I describe how we use volume and volatility zones as intraday traders to fade these particular zones. So FOMC minutes at 2 p.m., heads up, gang, keep an eye on the clock. These particular events have an impact because they're scheduled, the market knows they're coming, and the market discounts what they anticipate is going to be the reaction. So keep an eye on that economic calendar. And then as we go into earnings season, you guys know, for those of you in the futures room, we've talked about this forever. The tail wags the dog season. 6 weeks out, we start looking for double green trends. 4 weeks out, between 6 and 4, we start playing pullbacks, and we cut that about 2 weeks before earnings to avoid the IB crush. But we just want to be a little bit more conscious of what happens inside 2 weeks. All those notes are in the show notes today. And why do I mention that? Because ultimately what we have is an environment where we are coming into that tail wags the dog season. Why do I call it that? Because when we look at the indices and when we look at the ETFs, remember that heavily weighted stocks, these high concentration weighted indices, S&P, Dow, NASDAQ, most of the commonly traded ETFs are dominated by as little as 2 stocks to maybe about 4 to 6 stocks that make up sometimes upwards of 30 to 50% of the ETF's weighting. We live in a high concentration world, gang. So keep that in mind, most especially during earnings season. That's definitely something we're watching, we're aware of, and we want to capitalize on, when we're using ETFs and the stocks that are heavily weighted within them. All right, so first come, first serve questions. All right. Hey there, Vish. SPG. Yeah, let's take a look at SPG here. All right, SPG. As always, I'm on my TradingView charts for those of you that have been wondering. And by the way, I have a couple links to the first come, first serve breakdown that I already did back in December. So back in December, we talked about the specific hot zone that is the crude oil inventories. So we have a breakdown of that particular mindset approach in the Countdown Trader if you're interested. And then I have a video also in the show notes. Now, the video is back from May of 2020, so it's almost a year old, but it's a breakdown of how we fade the hot zone. So you can check that out in the show notes. All right, so SPG. I like the uptrend. It's a nice uptrend. Again, here's what's really interesting, and I think some of you saw this in a number of tech stocks recently. Never, ever short sideways, sort of boring markets when the preceding trend was up. All right. How's that for some chart art? So here we have a little bit of that quietness again, sitting at these volume. Look at these volume ledges that this is just clinging to right now, right in here, 2 points of control, nice little volume ledge. So yeah, I like the idea of a long. In fact, SPG is on my watch list. You can see in terms of the potential for upside. I like it. I like SPG a lot. And again, Bish, if you're in the Sector Secrets room, you will see that SPG is on the watch list that we built out this week. So thank you so much for the question. All right, next up is, good morning, good morning. Yeah, M, thank you for the HPMR update. Yeah, that HPMR goes right to that, how do you capitalize on events that have to be scheduled, gang? Any kind of scheduled event creates that discounting. And then we know there's going to be that volume and volatility expansion. And that's what those hourly price movement ranges, HPMRs, allow us to take advantage of. And yes, we just updated those. They're in the room drive in the futures room. So yeah, do check them out. All right. Prabish, good morning. Can I check out Comcast? It looks like it's ready for a trend follow. CMCSA. So Comcast is an interesting name within the XLC. XLC has been moving higher, and we know what's happened with Google. We know what's happened with Facebook. And are we seeing something similar in Comcast? So again, if we have a double green that goes yellow, like we do right in here, right? That goes yellow. What we want to remember is that, again, I don't want to short, usually I don't want to short a boring market. This might be a little boring. I don't want to short a market where the boringness came on the heels of an uptrend. And this environment right in here, this narrow yellow consolidation within overall bullish bias, I would say normally I'll look for a squeeze in something like this. So I would say that focus on the days that are minorly moving lower. That's when I want to build my long calls. If you want to build in a $54 stock like Comcast, I don't think it's quite as cost prohibitive as trading Booking or trading, Google or Amazon. So I don't know that I would have to go the debit spread route where we're offsetting the cost with the two legs, but you could, because remember, when you reduce the cost of a trade, you're simultaneously reducing, yes, of course, your cost, but your potential for loss too. So I would definitely look to start legging in if you want to do that to a call debit spread, or if you want to just start building the long position. Now, this orange line is indicating where I would like to be long, but I also think we could probably ratchet that up a little bit. So Comcast is definitely one that we're going to keep our eye on. And again, we love it because it's part of that XLC narrative. And that's been really the best part of the entire tech. As far as Freeport-McMoRan goes, I've been backing off that one because while copper has been tracking very nicely, Freeport-McMoRan has been a bit of a hot mess. So I'll stick with the copper long, but for now, I'm going to back off because one thing you guys might have noticed, you see it in copper, you see it in crude, is the reflation trade has been a little lethargic. So I'll back off that one for now. All right, so next up, can we take a look at the XLE? Absolutely. All my cards on the table. I do have a long position in XLE. So is today's crude oil inventories hot zone possibly something that could impact our XLE? Absolutely. But this is a trade, again, a sideways market preceding the move higher. I'm looking for that move to the upside. So again, don't get disheartened by sideways movement within the context of overall directional bias that is bullish, and don't think to short it, right? Think about the compression and then eventually a continuation. I think far too many traders, when a trend exhausts, go right to a reversal mindset. We don't want to do that. Maybe intraday, that makes sense. But end of day, keep in mind more of that continuation of the trend that was. Or as Charles Dow kind of told us, keep with the trend, or as I paraphrased his work, respect the trend that was. Okay. So thank you as always for the question. I like it a lot, David. Intel's on our list for semis. And so as is, we have about 3 or 4 semi names that I have identified as relative outperformers within the SMH. Pullback buy, it's good with me. The challenge will be, we'll take a look. So this is a little bit different, but let me walk you all through this. Super, super easy peasy simple. When is our earnings date? Right in there. Okay. So I'll drop a vertical line there. Now this is the 21st. Let's go back 1 month. So I'm going to basically drop another line around the 21st, 22nd of March. So this is our 4-week window, right? So those of you that follow the 642, this is 642. And then I'm going to go 2 weeks from there. It'll put me around the 14th. Okay. So that's really it. That's 642. All right. That's 642. In other words, 6 weeks out, we want to start looking for markets that are in double green. So right now, I'm not interested in, for example, the XLF earnings that are about to come out, because I'm actually thinking XLF, that's next week. 6 weeks ago, I was looking at XLF trends for the double green. So the next batch of earnings plays are the ones that are 6 weeks from now. The ones that are 4 weeks from now. That's that sweet spot to identify the trend and start playing the pullbacks. And so the pullbacks are going to be relevant when they're double green. So if at 6 weeks I see, okay, double green, at 4 weeks we're double green, I'm going to continue to look for those opportunities. But then right around 2 weeks out, I'm winding down, because I find that if I have an unrealized winner, I will probably want to realize a profit. And if I still have a nice cushion of time and I still have a intact trend, I might play that right up until the day of earnings. So if it's earnings after the bell, I'll want to get out the day before or that session of. If it's earnings before the bell, I'll want to get out the session before. But I'm not very rarely going to hold through earnings. So we want to take advantage of that move in that 6, 4, 2 week window. So those are the weeks. That's all that stands for. A couple vertical lines. Double green analysis, those are the markets that are best poised. And Intel's in that window. Shaley, so great question. Thank you so much for that. Intel's absolutely in that window. Okay, what do I think of Bitcoin? Christian, I'll tell you what I would suggest is the same thing I would suggest for really anything. Buy the dips. That's it. Buy the dips. There have been plenty of dips. I don't add to my current Bitcoin position that was, for the most part, built in 2016. What I do now is I look at pullbacks into the wave. And so that means as a trader, and I don't do this a lot, okay? But as a trader, these are the dips. That's it. Because look, it's the same analysis we talked about before. Double green or transitions out of double green, why on earth would I not do anything but focus on pullback buys, buy the dip, or even when the market gets boring like it did back in here, right? We wait. Don't short a sideways boring market when the preceding trend was up, right? That's a low probability trade. So I'm going to continue to look for those buy the dip opportunities. So thanks for the question on Bitcoin. That might be, we haven't had a Bitcoin question in a while. So thank you for that. EOG, I like EOG a lot. It's right back to two things: trending market, reflation trade, sector that I believe in continuing to the upside. So pullback buys, absolutely. But again, this is a May. So let's do that 642 one more time. So this is a May. Now, again, we don't always have to worry about this particular hot zone. We have hot zones through the week. For example, again, we've got Crude at 10:30. We've got FOMC meeting minutes at 2 p.m. And then we've got Jerome Powell tomorrow, I believe, at, let's see. I believe that one is at noon. Yeah, so we have Jerome Powell, Powell himself. So we've got that noon hot zone tomorrow. So this is the earnings, which gives us a completely different type of longer term trend following approach, as opposed to a little bit more of potentially fading. I typically don't want to be short going into Jerome Powell. I don't want to be short going into FOMC minutes typically. Any kind of Fed event is usually going to be a precursor to buy the rumor, sell the news, right? But anyways, this particular event would be, again, go back 4 weeks. So that puts us at about April 5, and then go back 2 weeks from there. That puts us at the end, basically at the end of March, right in there. And so are we double green? You're good to go. I mean, that's the window where we start looking for that identification. That's the window. So that's all we need to do. 642. But 6 to 4 and inside 4 weeks is that sweet spot if the market is double green. Okay. All right. So EOG would definitely put us both in that earnings window and also in that reflation window. And of course, I love the energy trade. It might be a little lethargic right now because right now, everyone's got their eye on tech. Tech is back. Tech is playing. Basically, you had the Dow running away because the Dow disproportionately benefits from reflation. The transports, the industrials, you'll see are all been just all sorts of green and heading higher. S&P has been wanting to track with the Dow, but it's been held back by the Nas. And when you see a full return to risk appetite, everything gets bought, but Wall Street starts doing what? What was lagging? Where can I find the deals? Do I want to buy the Dow, transports, and industrials near their highs of the range, or do I want to scoop up some of those deals that were moving sideways or that were actually moving lower, like we saw in tech, consumer discretionary, semiconductors? Keep an eye at CLOU, SKYY, XLC. That's where you're seeing a lot of the favoritism right now. And that's why the market feels like it's often playing catch up, because when the money starts flowing in, it's not always going to be at the markets that are at the top of the range. When will we see that possibly help out small cap? That was leading in many ways. It was kind of strong when others were weak, and it's sort of taking, again, a little bit of a break. So the market's favoring things that they felt had been neglected. And, anyway, so don't be surprised to see a little bit of that reflation trade take a backseat to everyone surging back into tech. And there's great momentum opportunities there right now. All right. So next up, hey there, Gary. You're looking for a video or a semper class that best walks through my chart setup. So most of my work revolves around the 4 factors: price, time, volatility, volume. I've got a volume class, that's submarket sonar. We've had a day trading class. I mean, most of my classes will focus on my main tools, the trend, grab, wave, things like that. If you're interested in more of the volume analysis I do, that would be submarket sonar. But what I would tell you to do is, I'm always testing things, tweaking things. And really, for the best, most up-to-date analysis and tools that I'm using, join me in either the futures room, simplerfutures.com, or the sector secrets room, which is simplertrading.com/sector. Just join me in one of those immersions, and it gets you up to speed really quick, for sure. All right. So next up is, we have a trial. Thank you. We do have trials, so can't beat that. All right, what are the bars on the right? Are they volume? A sheet? Yes. That's what I refer to as volume ledges. We have levels that are important because a market might have put in a high or a low or closed at a level, right? But what a candle doesn't indicate, what a candlestick or even a bar chart doesn't indicate, is how much size was at that level. We all know size in the markets does actually reflect sort of commitment and conviction and sort of traders or investors or institutions, whomever, digging their heels in. So we do want to know where those levels are, and they're not going to be found at the surface level of price. That's why I call volume sub-market, because now you're looking inside what's going on in that candle and say, well, how much size happened at a price level, not for the session, which is sort of a very, again, surfacey type look at volume. Sure, there might have been volume on a particular day, but what price did it happen at? And that's really where you gain a tremendous edge in looking at what level is going to affect reaction the most. So thanks for that. Yeah, sitting on my hand, again, Mark, what better way than just, again, to remind us that there's two ways to look at any type of major catalyst for movement based on the fact that it's on the economic calendar. So, if we've got FOMC, we've got actually FOMC member Barkin as well. And then if we've got these events on the calendar, yeah, you want to be aware of their potential impact. I completely agree with you. Let's see. M asks, is the red-green double line? Oh, the boxes? These are tools that I make available. Some of these, not all of these, I make available in the futures room. I say some of these, not all of these. Some of them are paid for. So the V-Score is my only premium tool package. I don't have a bunch of paid for tools, just one tool package that's premium. Everything else either is available free to members of the Simpler Futures Room or the Sector Secrets Mastery, or, a lot of times I'll put things in Raghee Labs, meaning I start playing around with code. This particular tool at the bottom, that's actually a volume tool. That's an effort for me to play around with trend and volume. I'm obsessed with volume because I think if there's any part of the market that's neglected with the most harm, it's traders looking at price and not looking at the volume behind price. So I'm pretty obsessed with volume. All right, so can we take a look at BNGO? Sure, and then we're going to wrap up. Sorry, I'm running a little bit over here. Let's take a peek here. BNGO. I'd have to pass on this one for the most part. However, previous trend was up. Current trend is sideways. You can see I just happen to have some VWAPs here. Let's bump this to the right date. That's kind of interesting. You see it's stuck in the VWAP and look at it stuck at that point of control. That could be an interesting place. If you're looking to position yourself long, yeah, you got the countdown to earnings too. If you want to position yourself long, a countdown to that hot zone, yeah, I'd keep aware of that, but there might be a nice opportunity there. But again, it's the same pattern of market up, market going sideways, and possibly see a retracement to the top end of the VWAP, maybe to this recent swing high. All right. Okay, so is the V-Score available on TradingView yet? No, it's not available on TradingView yet. It's available on TradeStation and Thinkorswim for now, and hopefully soon we'll get it on. We'll get it available on TradingView. All right, gang. Thank you as always for being part of Charts and Coffee. Releasing the Kraken in April, gang. Where's that Kraken? There we go. Releasing the Kraken in April. I'm very, very bullish about what we're going to see getting past last quarter. I think there's still a lot of money on the sideline. April is, by the way, seasonally a pretty, a lot of swagger. If I take a look at April in terms of movement higher, let's just pull up the S&P, for example. Yeah, I have a lot of optimism about what we're going to see come April. And so, yeah, it's hard to want to bet against those relative outperformers. But again, don't neglect some of those markets that right now we're seeing rotation into because they were neglected for the past, say, 4 to 6 weeks. All right, gang, as always, thanks for your time. I'll see you tomorrow. Sorry for running over here, but I'll see you all tomorrow, 9 a.m. Be good to each other.